And what I thought I would do is go into something called buyer's remorse. I don't know if this has ever happened to you, but maybe you have purchased what's called a bill of goods. Now you're stuck with those goods and something comes in called buyer's remorse. In other words, you thought, man, I wish I never even purchased this product. And believe me, it happens in the financial world all the time. So let's go over some. There's a bunch of them we came up with, but let's go over a few of these. The first buyer's remorse that we see a lot of times is something called a variable annuity. Now, keep in mind, variable annuities still have a place. I'm not a big fan of them, and here's why. Back when I first started selling variable annuities, back in the mid-'80s, they came out because it was a way to tax-defer mutual funds. It's really what the purpose was. The fees were not very large. In fact, the fees ran about 1.5% to 2%. But for people in a high tax bracket, it was a way to defer the growth on those mutual funds that normally kick off capital gains and dividends. The problem today, as variable annuities have started adding income riders and fees have gone up, some of these variable annuities can charge as high as 4% per year, which means you're going to have to earn 4% before you even get back to break even. So there are many different types of annuities. What I would suggest before you buy any annuity is download this guide I wrote called Annuities Made Easy, and then let us give you a second opinion before you buy any annuity. All right, number 2, the second buyer's remorse is something called a real estate investment trust, or REIT. Now, a real estate investment trust, again, might have a place, but for most savers, what you are not aware of when you purchase these REITs is they are very, very difficult to get out of, and if you try to get out of them, a lot of times you can lose a boatload of money. So the whole point of a REIT is to provide good dividends, possibly a little bit of growth, and it's okay maybe to put some of your money there, but if you think if there's any chance you might need to get that money out, think again, because in many cases those REITs are very, very difficult to get money out of without severe penalties. So on the REIT, I would just say let the buyer beware. There's another buyer's remorse item, and that would be something called indexed universal life. Now, what the heck is that? Well, let me give you some history real quick. Indexed Universal Life is very, very new. It's a newer product, and it's a take on Universal Life, or Flexible Premium Adjustable Life, as we used to call it. I sold that product when it first came out in the 80s, and let me tell you what happened. Back in the 80s, when I sold Universal Life, interest rates had spiked. They were paying on these policies 13, 14, 15%. In fact, I remember when I was learning about the product, a gentleman was teaching me about Universal Life, said in the computer program, just assume 10% to be conservative, which is laughable now because those policies, most of them only pay 4 or 5%. The problem is many of you who have Universal Life have realized this. Those policies have imploded. Most of them lapsed because everything was based on making 10 or 15% return, which was impossible. In comes Index Universal Life. I'm seeing the same thing repeat itself, folks. Index Universal Life. If you are using this as a borrowing tool for tax-free retirement and for planning for tax-free retirement, very, very dangerous strategy. And I would say this, if you get an illustration from someone peddling Index Universal Life, make sure they run the illustration at an assumed rate of 3%, 3% max. And you're going to watch that policy all of a sudden do the same thing I think Universal Life did back in the 80s and 90s. It's going to eventually implode. So be very, very careful using any type of life insurance policy, particularly Index Universal Life, for retirement planning strategies such as tax-free income. Very dangerous strategy. Let's see, another form of buyer's remorse, target date funds. Now, what is a target date fund? Well, this was a very shrewd, ingenious invention by the mutual fund industry. Nothing necessarily wrong with target date funds, but they can be very misleading. A target date's purpose is to help a saver who knows nothing about what to select within a 401k plan try to select mutual funds that someone has arbitrarily said would be good for the date you're going to retire. So let's say as we record this show in 2024, and you say, well, I'm going to retire in the year 2030. It would be easy if you don't know anything about investment selection to go down a list of investments and select the target date 2030. Now, what does that mean? Is it guaranteed? Is it safe? Doesn't mean any of those things. And as we can see from this graphic, in the last couple of years, some of these target date funds that were supposed to be very safe have lost a ton of money. So what I would say is check with us if you're having trouble distinguishing whether you should invest in a target date fund or some other fund within your 401k. We would be happy to talk to you further about that. And finally, one of the buyer's remorse is the rate of returns on indexed annuities. Now, folks, I'm a big fan of indexed annuities. We try to remind people we have for years that indexed annuities, again, They are not guaranteed to make you any money. They're guaranteed to protect principal. That is the purpose of a fixed indexed annuity, and most of them do not have fees unless you attach an income rider. So you have to understand something. Yes, depending on what the market does, the indexed annuity may go up, but there are times, and we've seen this with some of our contracts, even when the market goes up, the fixed indexed annuity may not go up with it. That's because the fixed indexed annuity is tied to what's called a renewal date. So for more information on fixed indexed annuities, I highly recommend you download our booklet, Annuities Made Easy. I get into the 4 types of annuities, and if you'd like to research an indexed annuity before rushing out and purchase one, especially those that have bonuses attached, I would highly recommend you contact us at Tony Walker Financial.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips, and be sure to hit that like button and that subscribe button for more videos.